Well, hello and welcome to All Access, which we've designed to help DIY investors learn to harness technology and maximize returns. I'm Nadine Blayney, and as always, I'm really happy to be bringing you this investor event. A reminder, there will be a Q&A session featuring all of our expert guests at the end of the discussion. It's an hour long. We really hope you stay around until then. Now, to start, we're often asked at Ausbiz, what tools investors can use to help them make the best investment decisions and whether it's worth it, of course, to pay up for data and screens and everything in between. Well, joining me to discuss, we've got Doug Morris, CEO of Sharesight, Andy Rogers, who's Director of Stockbroking at CMC Markets, and Mathan Somasundaram from Deep Data Analytics. Welcome. Nice to see you all here this afternoon. Mathan, not only that, but we're often asked, as an investor, do I need to get a Bloomberg terminal? I mean, what's your take?
Look, I think it comes down to your investment portfolio size, how much you're investing, what kind of amount of work you're willing to do, and that kind of then moves towards to what kind of tools you need, what kind of advice you need to manage that kind of portfolio. So I think that determines the big part of it.
And what about you, Doug? I mean, there's a whole world of subscriptions out there, all the different things that you can pay for. What type of information do you think investors need to get their hands on the most?
Well, like Mathan said, it depends on what type of investor you are. Are you a retail investor who does things yourself with a sort of a modestly sized portfolio, or are you more on the institutional end? I would say, though, that every investor needs some level of information. Otherwise, you're basically going to be trading brand names that you know and looking at a share price. That's kind of it. So I would always recommend some level of information, preferably from an independent source, or at least understand kind of who's getting paid to produce the research that you might be looking at.
Yeah, so understanding essentially what's behind it, what their intentions are, so it's a do your own research kind of scenario. Andy, in your experience, is the gap between retail and professional investors closing?
It certainly is, and the reason for that is technology. A Bloomberg terminal, I think the rack rate is $25,000 US a year, so that's clearly outside the reach of an individual investor, even someone who's in the industry as an intermediary. The technology now, there is so much more available to retail from providers like ourselves in terms of the tools we get. And also some of the independent third parties, some of the fintechs cropping up with really powerful tools. A good example of that would be, 2013, investment banks were pitching to CMC their algorithmic order capability. We've recently launched that to retail investors. So retail investors can enter an order into our system, and it will watch the market and get your volume weighted average price as an example. So that's just one example of the tools now available to retail, which just weren't there before. And that's only going one way. So there's certainly the gap. We all use the same technology to trade, whether you're a big investment bank or you're a retail broker. We're all connecting to the exchanges. We're all accessing metadata from these research houses, parceling up and displaying it in an easy to use format. So absolutely it's closing.
And as far as other information, I mean, you've got data at your hands at CMC. Are investors in your experience getting their news, I suppose, their market news, are they getting it from the ASX? Are they getting it from social media now more, or traditional media sources?
So ASX Com News is on all the broker platforms, just like ours, and that is still very popular. So as soon as a company does an announcement, they release it to the market, and it's on our platform within seconds. We also use professional newswires from the likes of Dow Jones and Reuters, but the Google Analytics data suggests that even though they're popular, they're becoming kind of less important. And our hypothesis for that is social media. So Twitter is very, very quick. We've heard some negatives around social media with the GameStop saga and whether sources have been, it's credible data, but certainly, companies themselves use social media to announce their results. There's Facebook social groups which our customers use. We know they use because we monitor them just to check that everything's okay with our service. And they're very powerful because you get that, multiple customers validating the responses. But again, there's definitely the trend away from the traditional news wires. But I mean, businesses like Ausbiz, our customers are certainly tuning in and listening to some of the content you have and the experts.
Well, thank you for saying.
Yeah.
Doug, it can be overwhelming for the average investor to get their head around. I mean, I've even had people say, when we talk consensus estimates, where do you get them? Are they available to retail investors? In your view, what's negotiable and non-negotiable when it comes to, I suppose, accessing that data and that research?
Sure. So I go to the primary source first and foremost. I think it's non-negotiable to go to the company's website, to their investor relations section, to actually read the annual reports and look at what they're actually saying and how they present themselves. The official announcements that you can get through brokers like CMC, the ASX, the market-sensitive announcements, that's very important as well. And then I would say, you mentioned consensus estimates, and those are useful, but again, that's sort of like what the herd is doing. I mean, it's a consensus of analysts that are all covering the same stocks in a relatively concentrated market like the ASX, and so that is useful to a degree, but I always like to look for like opinionated editorial type of research on the companies that I buy. So my preference, and I used to work there, is a company called Morningstar. They do a lot of primary research on shares and ETFs and managed funds as well, where they are sort of paid based on the quality of their recommendations. They don't really have any skin in the game.
Mathan, you're a data man, this I know. Does more information, however you get it, lead to better investment outcomes?
That's a loaded question. Data has become, I've been around long enough. I remember in the .com era, in the Australian market, I think it's probably about half a dozen fund managers actually had a proper database and were doing decent analytics. I actually built a few of them for a number of them. But now everyone has one. And everyone's got one, everyone's trying to use filtering system, everyone's trying to use it. Even the fundamental guys don't want to accept that they do a pseudo quant model, but they do. But the reality is, do people actually quite understand how to use these things? And that requires a fair amount of skill. And so excess data has actually helped, but also it's made it harder for the average person to consume. There's so much out there. So I find that just because there's data out there doesn't mean people are better educated. I think you still have to have, and I agree, it's an independent source, where if you've got to look at a source that's away from your transaction model, away from your the company that you are looking at, and an independent third-party source that offers you what the market is trying to price in, what the risk and returns are, gives you a much better view. And that requires a fair amount of work because every sector, every stock has its unique analysis that you have to go through.
So if you could put on use your crystal ball, what future technologies do you see evolving? What do you see at hand that will come about to help DIY investors, average investors make more informed, better decisions? Of course, the ultimate goal is to maximize returns.
Yeah, I think there's a certain level of commoditization that's happened over the multiple decades now. So the whole process is getting more and more commoditized. We've seen more and more platforms, more and more aggregated services being provided, like CMC, who provides a fair amount of offering that you can package depending on what you want to do. I think over time, all the services that an institutional fund manager gets will get commoditized. So you will get, my gut feel is in the next 5 to 10 years, you'll be able to just access a already built model on most of the big caps in the market. And then you can put in your own assumptions and see what the model would do and then invest on that. So the premium clients will move to that kind of model, I'd say, in the next 5 to 10 years, because everything is getting commoditized. People always think this is a unique service. It's not. Everything can be commoditized if you put in the systems, if you put in the skill base to build that. And the natural progression is where you're headed there. I would say over the next 10 years, retail super funds will have a substantial challenge from self-managed super funds because of just the fee structure.
Well, we'll get to self-managed super funds a little bit later on, but Doug, does that sound like the future for retail investors to you?
I think so too, yeah. And I suppose what I would add to that specifically is the kind of blurring of the lines between publicly traded companies and private companies and how those two things are coming together,
right,
which is really interesting. Like a company like Sharesight, we're private, But the level of interest in us and the way we're treated almost like a public company by our shareholder base is really quite interesting. And I think you've seen these private companies, especially tech companies, stay private for longer. And they're almost operating in sort of a public company way. And there's more access to invest in these companies now. So that's something I would keep an eye on too. Yeah.
Okay. Now, Andy, what do you take? What do you see as the future? Because you're at the forefront of bringing some of this to your client base.
So, I mean, certainly, I've mentioned execution and how that's become, very close to the institutional space. In terms of the research and the big gap, which has always been the gap in terms of the research we provide, where clients complete surveys, is what do I buy? We've got 40,000 instruments on the platform, so there's huge choice. There's 2,000 companies listed on ASX. We are seeing a trend, whether it's actually robotically generated or generated from a independent research team, for a pre-built trading strategy. So here's the international growth strategy, and here are 8 stocks that you can buy. You buy it on a monthly basis, and if you don't like it, then you cancel it. It's that simple. If you want to validate what this data is showing you, or the performance, you can use tools like Sharesight service, which allows you to back test the performance of the portfolio. So really powerful tools. Alternatively, you've got other vendors who will do a robotically generated model portfolio for your trading strategy. Again, for vendors like us or brokers like us, we're general advice. So we don't get into the stock tipping area. We would prefer to outsource that to the experts that have the resources to do that. We're more of an execution venue.
And Mathan, you speak with investors, on a daily basis. Do you field a lot of these questions as well? Just information, data, I think that a lot of people throw out 200-day moving averages and all that kind of stuff. And people are always saying, where do I get this information? So there are ways, but it is a case of knowing what's on the menu and knowing what your appetite is for each.
Yeah, and it's actually funny how a lot of people will start with the perspective that, I can be this, Wall Street trader type thing, and I can trade frequently and all that. And then they'll do it for a few months. They go, this is taxing emotionally. Yeah, it's a lot of work. And they think, you can click in the morning, buy, sell, and then go off on a holiday. It's not quite that. So I think investing is like everything else in life. It's an evolving process. You have to work out what works for you. And people will start with one concept and then go through the process and then learn that things might be slightly different and then evolve with it. The great thing is platforms allow people to evolve with their style, and because things have improved so much on the platform and the costs have come back so much, that investors are not stuck in a particular strategy. They can do something, and if it doesn't work for them, they can transition. It's not like you're stuck for 6 months or 12 months. You're not an institutional client. You don't have a mandate that you have to stick to. If it's not working for you, you have the luxury to say, stop, move.
All right, listen, we'll just put a pause for 1 second. I'll remind our viewers, and I see some questions coming in, that we will address your questions at the end of this event.